The problem with that is most of these guys don't have any gold. And if the price of something that you don't have any of goes up, it shouldn't really make a difference to you.
Rick is a bull on gold and precious metals. So speaking to a younger audience that may be interested in adding some exposure to their portfolio, Rick, if you could give us a little bit of your opinion on this.
Absolutely. And I need to begin by saying that I want to speak to a younger North American audience. So if you're not from North America, disregard some of what I'm going to say. The easiest part of the message has to do with gold. And the easiest way to sell gold to younger investors is to say, you have been screwed by my generation. Let me explain that. In the United States, the market that I'm most familiar with, on balance sheet, the federal government debt, and sorry, yes, we're going to talk numbers before we talk narrative. The on balance sheet liabilities of the US government at the federal level are $20 trillion. Now, there's no way that we, the old folks, are going to pay this off. You are going to pay it off. But it gets worse. The off-balance sheet liabilities. You know what those are? Those are Medicare, Medicaid, Social Security. In other words, personified, me, are $120 trillion. So my generation and the generation before me have dug a $120 trillion hole, and we're going to give you the bill. Now, how do we service $120 trillion in recourse liabilities? Well, we do it in the United States with the national income, taxes and fees, less expenses. The problem is that the way we propose to service that debt, the national income, has brackets around it. That number, rather than being debt service, is going to grow by $1.4 trillion this year. Now, there's two ways that your generation can get out of the problem that we gave you. The one would be an honest default. You could say to the bondholders, yes, we realize we owe it, but we're not going to pay. Times are tough. Screw you. Strong letter to follow. Then, of course, there's the off-balance sheet liabilities. Social Security, Medicare, Medicaid, the care and feeding of old, fat, bald guys like me. What you should do is say, you made yourself the promise, you pay for it. Take it out of your savings, because we're not gonna. But that's not the American way or the Canadian way. What we're gonna do, as opposed to have a good old-fashioned honest default, is we're gonna have a fake default, just like we had in the 1970s. None of you were around for this, but let me tell you how it goes. You pretend to pay, but what you really do is you debase the method of payment. You print money to make the debt go away. Now, this is what my generation is teaching your generation now. It's called modern monetary theory. If modern monetary theory doesn't make sense to somebody in their 20s, it's because the person in their 20s is smart. The easiest way to describe modern monetary theory is a very different word called counterfeiting. Modern monetary theory is when the government counterfeits. Historically, through the ages, the way that you save yourself from debasement of the currency, the way that you save yourself from a generation like mine, who believes that you can add a column of negative numbers, the deficit, and come up with a positive sum, is gold. Gold does well in periods of time when social trust erodes. And any young person, anybody in their 20s or 30s who trusts my generation is out of their mind. I realize that your generation is primarily a narrative generation, but you have to get away from stories and get to arithmetic. And you have to do it right now. Remember this, the debt that has to be served is $120 trillion, and the income with which you propose to service it is negative. It cannot be done. The problem, the bill, is going to come to you. Oh, and by the way, I didn't include in that number state debt or local debt or unfunded pension liabilities. In truth, I think I've probably wrecked your next birthday already. But in truth, the number is much, much, much worse. So really, in terms of your future, you have two choices. You can trust my generation, look at the track record in terms of what we've lost you, or you can trust what other generations who have been screwed by their elders have done, which is to buy gold. You do what you're going to do. From my point of view, I would choose door B. Now let's move, just for fun, from gold to the gold stocks. By the way, Start your portfolio with the real thing. Don't start your portfolio with some penny dreadful mining company that's looking for gold. The truth is, if you wander around a convention like this, all of these guys will tell you what wonderful things will happen to their stock if the gold price goes up. The problem with that is most of these guys don't have any gold. And if the price of something that you don't have any of goes up, it shouldn't really make a difference to you. So start your portfolio by buying elder insurance. That is, buy yourself some gold to protect yourself against me. Believe me, it's a good investment. If you have money left over, the better gold stocks are certainly leveraged to gold. So when you begin to invest, think of gold as insurance. When you begin to invest, buy the gold stocks. And if you can afford to speculate, look at the junior gold stocks too. But start by buying the gold. Start buying the gold because you understand the legacy, the truly ugly legacy that my generation proposes to leave your generation.